Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and this is going to be a very interesting show. There seems to be a lot of different things from different places happening and a lot of different information. So there's a lot of data we want to get to. We want to talk about the significance of China's stimulus and their lowering of interest rates, which we might go into some stuff about the Fed as well. We want to talk about Jim Willie, a financial expert, put out some great content on X this week talking about a new financial system, and we want to get into what he had to say. And then Israel is looking to potentially make gold illegal while states, one by one, are taking the taxes off and making it more of a legal entity. So we'll get into that topic because there's a nice contrast between what's happening potentially in Israel, but Iran is taking a completely different approach to physical gold.
Interesting contrast.
Which is a very interesting contrast. We'll get into that. But first, Jerry, a little bit of celebration, shall we? Look, silver's up 36% in Canadian dollars this year. Gold's up 31% this year in Canadian dollars. That's really good. What did we see this week, and what were your thoughts on the action this week in the market?
Really good action this week. A very positive week, obviously, for silver and gold, both precious metals up, and that word precious connotates that they are monetary. And we have a huge monetary currency problem in the world, so this is why we're seeing the move up in precious metals. Silver rocketed higher this week, up at but the $1.50, was as high as 6.5%, hitting a 12-year high when it briefly hit $32.70. This could be getting close to that breakout point. And then gold up about $50 or 2% this week. Gold futures actually broke 2,700, so historic move this week. And we saw these records hit Thursday morning after the overnight news of China's monster package of stimulus, helicopter money on the way. Our popcorn's popping. They're going to be printing 142 billion. Now, some are saying China is not printing yuan. They could be spending US dollars from their reserves for the stimulus. So this theme, China is de-dollarizing while simultaneously stimulating their markets. And we're seeing that market is just on fire today, Jeremy. The Chinese market surged this week, up about 10% in the last 3 days. That's bubbly and frothy, to say the least. It's kind of crazy. It's crazy times we're in. Popcorn is popping, Jeremy.
Well, I think in that case, we always have to remember the difference between nominal and real. Mm-hmm. You know, nominal gains versus real gains. If the government's saying interest rates are at 2% and they're celebrating their win over inflation, but you're still going out to dinners or going to grocery, or, you know, you just got if you're in Toronto where I am, you just got your increase on your property taxes.
Yeah.
I think it went up like 9%. So hard to tell me that inflation, that they've won in inflation and at their 2% level. So the real world inflation is obviously much higher. It could get worse because they're looking to lower interest rates and create more borrowing and more spending again. And so, you know, it's one thing to say, oh, I'm getting 6% return, but if inflation, real world inflation, is at 8%, you're taking a loss.
Yeah.
So it's great to see that gold and silver have, you know, rocketed higher and really done some great catch up. Over the last 20 years, they've definitely completely obliterated inflation, but it's more than inflation as to why people are buying it today. It's more about that lowering interest rates means you're throwing in the towel on inflation. Stimulus says things are not good, and so that means there's a lot of counterparty risk, and you want to own gold and silver to protect against risk and also liquidity. Mm-hmm. You know, the fact that, you know, we have these discussions, holding gold outright versus ETFs.
Yeah, all the time.
ETFs, they close at the end of day, right? You don't trade it and get out that minute. It's wait till the end of day and get it closed. So you're already not getting quick trades.
Yeah.
So that's not really liquid.
No.
Especially if the market's falling. And, we used to do financing, and you'd have stop sells. And, it's one thing to have a stop sell triggered. It's another thing to get it filled. Right?
That is true. That is true.
We employ strategies of here's how you would get into the market. Here are signals and specific criteria you can look to figure out how to sell and when to sell. And I do find, and I'm sure you would agree, that many people are very black and white about how they're doing things. It's I want to put all of it in. Okay, but hold on. We don't have to jump headfirst into the right. Let's crawl, walk, run, get a sense of how this works. But people can't help having a binary approach to these things. It's all or nothing, right? Yeah. But you can ladder in, you can ladder out. And if you're expecting to always hold 10, 15% of the gold and silver in your portfolio as a hedge because it's negatively correlated to the dollar, then there's no need to have that large all-in mentality. So there's ways around it.
Yeah.
What are your thoughts on what?
No, absolutely. It is what it does come down to is liquidity. And I had this conversation with someone this week about the going back to the ETF and why would I want to buy something physical where I can buy the ETF. We have to go over certain objections, certain understandings where we're not dealing in a stock. We're not dealing in paper. We're dealing in liquidity here. We're dealing in wealth insurance. And when you're buying insurance, you're buying the physical. And to get into physical, there is a premium over the spot price. And we get into these things. So it is a practice that we've employed to understand where people are come from, what their pain points are, what their real concerns are, and sometimes peeling off layers of the onion. And as people crawl, walk, run, get into the 15%. Usually what we find, and when we share things like ratios and cycles and other strategies that we employ, which is very exciting, and it becomes more than wealth insurance. It becomes, yes, I want to partake, I want to participate in the top side potential in these markets because, yeah, it comes down to beating inflation. Inflation is not 2%. What the Canadian government is telling us. It's not 2%. It's double digits. And what can we use? What can we employ in our portfolios to beat that rate of inflation, which is double digits? A GIC will not do that for you at 4 or 5%. Do you really want to chase yield and take immense risks? There are bubbles left, right, and center. If you look at this China stimulus, it was furthering the the bubbles that we're seeing in the real estate market in China's ghost town system that they have. It's a very dangerous, and people don't want to roll the dice these days. I don't think they have been rolling the dice since 2008. People are getting very serious and looking at real tangible assets that will perform when the system resets. And we're going to talk about the resets in these systems. And we want you to give us a call, 1-877-8-SILVER, the website guildhallwealth.com or guildhallpreciousmetals.com. We have new price alerts that we want to alert you to because you want to know when to take action. Do you want to buy silver when it dips 1%? Do you want to know when gold breaks out over 2,700? Do you want to know when silver breaks out over $37, which could be that breakout point, what we talked about, the escape velocity last week? What is that escape velocity for silver? It could be the 37 mark. We don't know, but check out the Guildhall silver and gold alerts. You want to get this information texted to you or emailed.
And, at the end of the day, people might be looking at the gains in precious metals recently and think, just for its own sake, oh, large move, it must be over. Large move, it must be in a bubble. But at the end, when you start to dig a bit deeper into the demand on the metal and the reasons why, and we talked about being free of counterparty risk, having liquidity, that central banks are continuing to acquire physical gold. We'll talk about the BRICS a little bit later as well, and the importance of gold as part of that whole system. We see that UBS has an article out about why the gold rally may not be over. ING is talking about the rally set to continue. And there's just too many factors out there when you consider that gold is real money and silver is real money as to why this run is completely not over. I put a post out on X, Jerry, really early on in the week, and it was a chart showing what gold did in the 70s versus where we are on that chart. And don't forget, in the 70s, the debt in the U.S. was only $1 trillion. China was not involved in that market at all. It was only a Western move. You didn't have fast trading.
Nope. You didn't have derivatives. You didn't have helicopter money.
Yeah, it was just a completely different market. And, there was only like 3 billion people on the planet too, right? There was 7 billion ounces of silver above ground or 8 billion ounces of silver above ground. That's not the case anymore today. So it's a much different situation. And yet here's where we are on the chart. And it's so early on to think about that gold could go another 1,200%. Look, getting to $27,000 is la-la talk to many people, and it is to me too. But certainly 7, 8, 9,000 is starting to seem pretty reasonable when you look at gold's up over $600 in a single year. I mean, it's so not over. It's only just really starting to gain the momentum, and we want to see as many people take advantage of that. And we believe that the best way to do it is actual physical metal held either directly with you. You buy it, take it home. We do have a vault facility in case you decide I want to travel, but I want access to the liquidity, or I don't feel safe with having this much product at home. Then we do have a vault facility for that. Again, fully allocated, fully segregated to you. You own the product. You can redeem that product at any time. You can sell it at any time, buy more at any time. So you have a lot of freedom while maintaining the physical asset with no counterparty. And then we also do that in registered accounts where you can have physical outright. It is no counterparty risk, held in a BRICS vault outside the banking system, but still within your registered account. And we find that that's a very popular way to go. I think most people find that it's reasonable in terms of value, what it costs to do this within a registered account. And of course, there's been a lot of success. The number 18778 silver, the website guildhallwealth.com. Jerry, I noticed it too, and just before we went on air, we were talking about Jim Willie's posts this week. I used to subscribe to his newsletter, and it was great. He'd just constantly post here. The flood of news, and this was 10 years ago, and he's kept up, and he's got some great sources that he works with, and a really good financial analyst and I would say in a way that he looks at different pools of knowledge. It's not just what you see day to day or in the mainstream. He does dig deeper and kind of brings it all together. So tell us what Jim Willie was talking about on X about a new financial system.
Yeah, this week the move up in precious metals was stimulated by the massive stimulus package that came out of China. It was 142 billion, which caused gold and silver to ratchet up higher, hit records. And the following morning, the Federal Reserve got into panic mode. They sent out about 8 of their Fed members to go speak somewhere. Go speak and hush this market back and put a cap back on precious metals. And even Powell was out there.
Not just one wizard, 8 wizards.
8 wizards flying around, and just trying to keep a lid. But it was the China injection into the market. And according to the financial expert, Jim Willie, he really sounded the alarm, and it was a fire alarm. This is what he said. This is their first intervention, Jeremy, since the 2008 crisis. So this is something huge. They wouldn't be doing this unless something within their banking system, within the global banking system, was on the verge of collapse.
I just want to interrupt there. I totally agree with that, because we've said many times the Fed doesn't do things proactively. They do things reactively. And Michael Oliver talked about this weeks ago. I mentioned it last week on the show, that if the Fed is dropping rates, it's because they're panicking about something.
Yeah, it's usually the case. And again, in the first segment, people are commenting, China is actually not printing the one. It's not their helicopter. that they're using. They're using the U.S.'s helicopter, that they're spending U.S. dollars from the reserve, one of the biggest holders besides Japan of U.S. reserves for the stimulus. China is de-dollarizing while simultaneously stimulating their markets. But China is facing, according to Jim Willie, a tidal wave of non-performing loans. Real estate sector is a ticking time bomb. And they have trillions tied up in what we call shadow banking, a completely opaque system with unregulated high-risk debt instruments. The rot has set in, and now they're flooding the banks with capital, just juicing it, just to keep the illusion of solvency alive. And how much have we seen this illusion happening with our own banking system, with the rigging and the manipulation of numbers and figures?
But what is Jim Willie saying is going to result of that? Because I think when I hear that, I think, yeah, but they've been buying gold hand over fist. I mean, they could be doing this on the one side, but on the other side, they're clearly preparing for a new system.
Yeah.
Obviously with the BRICS and the unit. So there's a dichotomy happening. There's a split. There's this fake economy they're trying to save, and then there's this real economy that they're preparing for.
Yeah. He concludes that the global financial system literally is just a house of cards. One by one, they're all like dominoes falling. This capital injection, it's nothing more than putting lipstick on a corpse. The financial system's dead. The entire financial system is hooked on cheap credit, and it's coming to roost. Look at the Federal Reserve, the ECB, the Bank of Japan. They're all in the same boat. And what we're witnessing is the early stages of a monetary system collapse, and it's happening real time. And China's move is just a sign that they're out of options. And other central banks will soon follow suit. And he talks about gold. He chimes in on gold and the solution. And he's so right. You know, if you're looking at what happened this week in Japan, because my mind is, I'm focused on Japan. I've been talking about that, the yen carry trade, for a long time. And just this week, just today, recording on the 27th, Friday, the yen surged this morning. There was a political veteran, Shigeru Ishiba, as the leader. He was voted in. Some view this person as his ascension to end Abenomics, which is the easy monetary policy, I guess the juicing of the yen carry trade was done under this type of policy, paving the way for more Bank of Japan tightening and a stronger yen. And we have to keep focused on their next Bank of Japan decision, their rate decision, which is October 31st. Could be a rate hike and would make a really scary Halloween day with the zombie Bank of Japan unwinding the disastrous carry trade.
But
so
you would think knowing this that the Western banks would be able to front run it. So they've already got the warning shot across the bow the first time with the yen carry trade unwinding, and it was had a massive impact. It was just a few weeks ago, I feel like.
The Black Monday.
And it had a massive impact immediately, and you would think the banks are probably more prepared for this, given that this new administrator is sounding off that he's going to be more conservative.
We'll see.
Okay.
He's definitely he wants to hike interest rates, so he's a hawk. He wants to rein in on the loose monetary policy, and he wants to save the yen. But as we know, the yen carry trade was a popular investment strategy where investors can borrow the Japanese yen at negative rates and then use that capital to invest globally in higher yielding assets. And now, as those rates start to rise, you got to borrow. You got to buy back the yen at higher yen. It's a disastrous trade. It will erupt the massive toxic derivatives market.
The whole thing's a joke, though. Like, really, I mean, you think about all these central banks buying gold and the Netherlands saying we're going to revalue it. That's all you have to do. If you need to, I get it though. You still have these countries going into debt and spending money and saying, well, we need to give $100 billion here and another $100 billion there. And there's scandals and all of these things, but you know what the fix is. And so I want to spend a few moments talking about Jim Willie's fix and the new system. I feel like the fix can be easy. You got to revalue gold. Right? Why is there inflation? Because the currency that you're using has lost its purchasing power.
That's right.
And how are you going to pay back the debt with this when you don't have any economic prosperity. You need economic activity, and you know that the markets were extremely successful when there was a gold standard. So let's talk about the good stuff. What is Jim Willie expecting in a new financial system that we can expect gold to rise like crazy?
Prepare yourself. Incoming gold and silver. Prepare yourself with gold and silver, because the great reset is coming, and it's not going to be some utopian digital currency future, right? Like
Canada.
The Bank of Canada has just squashed that idea.
But they shelved it.
Well, they shelved the ArriveCan app as well. And where is that? It's on the very, very top shelf somewhere, and we're never going to see that again, right?
It's like the end of Indiana Jones. It's just like really put on the shelf, like it's on a way, way back shelf. Yeah, maybe. I mean, look, at the end of the day, they felt enough pressure against them, and all the money that they spent to do it, that they felt enough pressure that they can't go forward with that plan. That's a win for all of us.
Yeah, absolutely. So he is saying get prepared with precious metals. The reset will be chaotic. It could be catastrophic for those who are not prepared. The winners in this collapse will be those holding real assets, gold, silver, and tangible wealth. The losers will be those holding fiat, paper, and worthless promises from a dying and dead system.
So he's expecting a collapse of sorts.
And the conclusion is the silver revolution. Okay. It's inevitable. The storm is brewing, and at the heart lies silver. The financial system is unraveling, and fiat currencies are living on borrowed time. Silver is the solution, not just as a hedge against inflation, but as the very foundation of a new financial era. This is not merely a prediction. It's impending reality. Those who prepare now will emerge victorious in the coming upheaval. Those who ignore these signs will be left scrambling, trapped in the ruins of a collapsing system. The silver standard is not a possibility. It is an inevitability. And when it arrives, those who possess silver will command the future. The time to act is now. The silver revolution has already begun. And don't get left behind. It's a silver squeeze, and it's happening. And those who have the gold, even the silver, will make the rules.
The number 18778-SILVER, the website guildhallwealth.com. You can go to guildhallpreciousmetals.com. It's our e-store. You can pick up a tube of maples, an ounce of gold, set your price alerts. Great tool, guildhallpreciousmetals.com. And Jerry, does he say why there would be a silver standard?
Well, he didn't mention in his spiels this week when he just went off on tweet after tweet. He didn't mention on that particular tweet, but he does bring in the BRICS already setting up their system. And as commodity stratus Grady on X often comments, the next monetary system will come from the BRICS, and we're seeing that. And we're going to be meeting. The BRICS summit is happening on October 23rd. And it's just going to be just that. We're having systems being set up, the Enbridge, as you mentioned, the unit. These things have already been put into place long before. We're just seeing everything being rolled out. And, as the arbitrage continues to ramp up, the vacuuming that is happening out of the Western vaults is real. This is what's happening. When you have a higher price in Asia, you can buy low in North America at our peril and sell it over there at a profit, but you have to ship it out. This is why we're seeing vaults being emptied. The Western vaults from London to this LME, the COMEX, even the NYMEX, things are being drained. You need the physical and you need the tangible asset. We're not talking about ETFs or certificates. You need something that is that undervalued. Historically, one could buy 15 ounces of silver with 1 ounce of gold. And today, it's about 83-1. This is the best opportunity to capitalize on this, is to look at that silver to gold ratio, get your hands on an undervalued asset. When everything is a bubble, when everything's frothy, when everything is risky, you'll find your solace in some silver, even some gold, and move into the next financial system.
The number 18778-SILVER, the website guildhallwealth.com. In the next segment, let's spend some time on the path to $50. We've seen silver soar. We want to take a look at what the paths of higher prices in silver could look like, and perhaps maybe even talk about what a silver standard could look like. and as well as more on the BRICS. There's a lot to come. We've got a lot to talk about here with silver, with its gains, where it's going, the number 18778 silver, the website, guildhallwealth.com. Give us a call. We'll show you how to hold physical gold and silver in your registered accounts. If you've been kind of following the precious metals market, if you're sort of new to the market, you've seen some really good moves. Silver's up 36% this year in Canadian dollars. Gold also up 30%. These are pretty big moves if you look at the last 20 years, Jerry. There's only been a handful of times where it's moved up over 20% in a year, but it does happen. We've seen even bigger moves in silver, for instance. I've seen moves in years where silver was up over 70% in a single year. So it's not completely uncommon. Obviously great to see. One of the things when we're talking about silver getting to $50 and beyond, because I believe that if there is going to be some sort of silver standard, whether or not we need that, ultimately in terms of the fundamentals in silver, how much product is out there, how it's going to get out of the ground in the future, all of the demand for it in industry, whether it's in your car or in the electronics that you're using, and all of the new things that could be invented over the next several years. What does the path to $50 look like? And I want to start the conversation off, Jerry, with the premiums. Premiums during the pandemic skyrocketed. You were looking at $4 over spot for a 100-ounce bar of silver per ounce. Today, we're not seeing that. And I was talking to Paul about that, and I'm pretty sure I know what the reason is. And I'm not sure how long the window's going to stay open, and I want to get your opinion. I believe that right now we have a lot of people buying, a lot of big entities buying, but at the retail level, I think you have a combination of sellers and buyers.
Yes.
I think you have people who are selling because it's getting tough out there in the middle class, that the government has encroached way too much. They've made it way too difficult for people to get by, and they need that liquidity that we talked about that's so important in that first segment. We discussed it. So they're selling some precious metals. On the other side, you see people who have probably been in the market for 5-6 years, that they finally see the price get over $30, and all of the frustrations that they've lived through to get the big move, they feel like this is my chance to get out, right? Which I wouldn't agree with that. Obviously, we'd hope to have a conversation because we'd want to show how much further it has to go, which is what we're talking about here. So I think that the retailers are not depending on the wholesalers as much. And so that's why the wholesalers haven't raised premiums. But I don't think that that's going to be a long-term situation. What are your thoughts?
Definitely agree with the balance of the market right now. You have tremendous buying and huge demand from family offices to just families. And then you also have that demand coming from the rollovers from IRAs and RSPs, TFSAs, LIRAs, huge accounts that are coming in, and they're going more aggressively, exceeding the norm, quote unquote, 10 to 15% allocation. No, they're arguing just like Egon von Greyers, who is one of my digital mentors, as I call him. I read his stuff all the time. Back in 2022, he says the world was in a the world was in a government deficit and a runaway bank credit crisis. At that time, Egon von Greyers advised his investment clients to put up 50% of their assets into physical precious metals. Today, I would argue that would be a lot higher. And that's what we're seeing, huge buyers, but it's being tempered by a lot of sells, and we're helping people. If they need to sell, they have to sell. We want to show them the opportunities or some of the missed opportunities that would be had. But we understand, life, because of the Bank of Canada printed about 4 times the size of our economy, things have become too expensive. But we're showing people that, there are options to unlock some of their wealth without selling their assets. A new program that we're going to be launching soon, and we're very excited about. But selling has been something that we're seeing, but with tremendous demand, it's going to put issue on the supply side. And talking about premiums, there are two factors that go into the premiums when Guildhall buys from wholesale. And we deal with the largest wholesalers, so you're dealing with the largest and the best in the world when you're dealing with Guildhall. Two factors would be the fabrication, or the whole mining and logistics and fabricating into a product. That's one, right? But then you have the market factor, which would be the supply and demand side. That's going to shift and change. And as we saw, what you mentioned, the lockdowns in 2020 that happened, and our market got hit, and the premiums skyrocketed from where we are today at around $1.20 up to $4 or $5, literally overnight. And this is the type of market in a silver squeeze environment where there's just not enough silver, above ground silver, to satisfy the contracts, to satisfy the huge buyers. And to be honest with you, the psychology and what we call the escape velocity in silver has not been peaked yet. So the excitement is just not even there yet. Even though the market's hitting all-time highs, Jeremy, almost every day, the psychology is going to hit. People are going to realize they can't get the silver, and when that happens, you're going to see higher premiums.
Yeah, we'll stay on this topic about the path to $50 and beyond. I think that look, there's been a mix of buying and selling. It's that's good. It's good for business. I don't mind that, but you'd like to see people be able to hold on to their metals, and I think that is going to change, and we're going to see a lot more buyers coming into the market overall as sort of the selling subsides and panic sets in. As well as, let's be honest, some greed as well. As when, there's no doubt that when you see momentum in the market, you want to get in on momentum. It's very difficult to buy in a market that's going nowhere, up to 28, back down to 26, up to 27, down to 26.80. It's not a market that presents itself to being a part of, right? But when you start to see momentum, you really want to get a part of it. And I think that that's going to be a major changing factor for silver going forward. And my point is that don't expect premiums to stay low just because the price is rising. I think it's going to get into a situation where it's only going to get more expensive. The price is rising and the premiums are rising, which is going to be a mix that could just drive prices even higher in a way. The number 18778 silver, the website guildhallwealth.com. Again, let's stay on this. If you want to pick up some silver right now, go to our e-store, guildhallpreciousmetals.com, and you can even set some alerts if you're looking for a lower price or a trigger price. You can sign up for that on guildhallpreciousmetals.com. This is a great time to be thinking about making some changes in your portfolio. Consider having some physical gold and silver. We always recommend a crawl, walk, run strategy. It's great to get your feet wet, understand this market, but we always find that when people do that, they get more energized about the market, more confident about the market, and they want to get more involved. And that's really the key here. We've seen some great moves. It's always a beautiful thing to see people being up, 30, 40, 100% in some cases, or higher. Gold's up over 500% in the last 20 years, and silver's not far behind. Now, can it go much higher? Yes, of course it can. $50 silver, which only matches the all-time high from 1980, is ridiculous in and of itself. There's less silver above ground. There's more people in the world. There's more need for it. And as the price of gold gets higher and higher, and this is one of my paths to $50, Jerry, as the gold price gets higher, silver is going to start to look more attractive as people make that economic decision to say, gold's a little pricey for me. I think I can buy a lot more silver, and I see it moving up more rapidly because it's a smaller market. Mm-hmm. What do you think about that? Are people going to decide, I think I'll buy more silver than gold. I know I need metals, but they want that metal more. Yeah,
you're going to see more participation in the market. People who have gone from crawl, walk, and are now running, and they're adding to their allocations because they know that the psychology of getting into the market is now in full effect, especially the people. Remember, less than 1% of the population in North America own physical precious metals. We don't have a lot of people in the market yet. But when the system shows the signs, and I read a quote the other day, and I'm thinking the yen carry trade, because it's just that massive. On October 31st, it could be that point where they raise interest rate, it rattles the derivatives market, and someone said that we will see the importance of power money, which was the inverted pyramid. The very tip was power money. You have gold, the very small market, but at the very tip was the silver market.
Silver coated.
The silver coated tip. And people will see the importance and what Exter's pyramid is all about. And when you see all that money that's sloshing around, 200, 300 trillion plus derivatives, wanting to flow into a finite market of 8 trillion, forget about it. You're not gonna get your hands on it. And then the psychology triggers. You couldn't get your toilet paper during the pandemic, the lockdowns. Well, silver is much more important. And that's where we're gonna see the escape velocity and the ramp up happening. The silver and gold cycles are at play. I did mention to someone who was about, asking, should I put it into a TFSA? Of course, most people maximize their TFSA because, first of all, it's tax-free.
Yeah, you don't have to worry about those extra capital gains.
I don't want to put a dud in a TFSA that's not going to do or go backwards. That's the whole point, is to get something that's going to grow. And silver and gold will experience this growth, and you will maximize your TFSA with it because of certain cycles, like the ones we're in right now. You have the rate cut cycle and then the super cycles in precious metals.
The number 18778 silver and the website guildhallwealth.com. I think another path to $50, Jerry, is as more people see the price rise, you get a growing momentum, and you get more participation because people become interested as the price rises. I hate to say it, but people like to buy at higher prices. So at $50 silver, when we are at an all-time high, people will be looking at it. I think it's going to be interesting. They're going to look at it and say, all-time high? When was the last time you hit it? 1980? What's the difference? What are the fundamental differences? And I think at that point, it's going to shine a light on the market, and that's going to bring a whole new set of participation. Now that's just sort of FOMO stuff, and that's cool. And they're going to learn about the market and the reasons to be in the market. The other pathway to it is also, as we're kind of touching on, I think you're kind of touching on it, is the panic mode. That if there's a meltdown in stocks, if there's a continuing meltdown and continuing inflation, which we know we're going to have, they're lowering rates, you have a stronger motivation to be in a metal that is there specifically to protect the devaluing of your currency and to protect your wealth and grow it at the same time. So I think you have stronger participation as the market rises. Higher prices is going to bring more people. I think as you hit $50, people are going to say, oh, well, it bring a whole new interest into the market. And it's going to move quickly because it's a small market.
Yeah. That's the type of the characteristics of this market. It's very unique. It's not like any other. It's the other markets. We can call them what they are. They're bubble territory. You don't have a bubble in precious metals. They're very undervalued, and they will perform when the system gets rattled and when the investors get rattled and they finally make a move into the market. It's going to be fantastic. The gains that are coming, and if the system does go through another panic cycle, what they're going to do is continue to cut and slash interest rates, which is detrimental to the paper currencies and only very good for metals.
And where do we go? Where do you think we go at 50? Do you just reevaluate? Do you look at the ratios? Do you consider, the gold to silver ratio? Do you consider the supply demand? Where do we go from there?
Yeah, you factoring all those, it will go leaps and bounds, because I believe if the escape velocity, the resistance level is the 49.50, then it becomes easier to make all-time highs. So I think we'll easily double from that point. $100, $200, $300 silver is inevitable. That's where we're going to be going.
Yeah, I think ultimately to that point, the psychology of the market is, you need silver to get close to 50, break 50, and I think once it breaks 50, you're in a whole new realm of ranges. All of a sudden, it's a $60 to $70 range instead of a $31 to $34 range. In other words, the ranges get much bigger in dollar terms. And that's why it's important to get in early, right? You don't want to be buying at 60 and waiting for the price to get to 120 to double your money. If you can buy in at 35, knowing it can go to 70 and 140 and higher, that you could ultimately have a chance to really increase your purchasing power. And that's the key here.
That is the key here. And I think a lot of Canadians, and we're going to go back to the whole 2,000 ounce of silver can buy yourself a house. The Bank of Canada with, the regulators this week scrapped the whole stress test, making it a little easier for Canadians to afford a home. But remember, if you do want to own a home, you could do it with silver. Just a measly 2,000 ounces of silver, which is just under 100,000 today, will be able to buy you a home like we did in 1980. 2,000 ounces could do that again with these cycles that are at play. We have the rate hike cycles plus the super cycles in play. We can show you the charts, and this is what we want to do because, as Harry Brown, the permanent portfolio investment strategist, said, when the paper money systems begin to crack at the seams, the run to gold and silver could be explosive. And that's exactly what we're going to see. And we want you to be a part of it. Give us a call. We're here to walk you through it.
And the number is 1-877-8-SILVER. The website, guildhallwealth.com. This is a great time to get involved. We'll walk you through it. We're very supportive of our clients. We're very customer service oriented, and we'll show you how to get into your registered account, how to open it, how to fund it, how to own physical gold and silver within it. We're there with you every step of the way. You just have to call the number 1-877-8-SILVER, the website, guildhallwealth.com. If you've missed an episode, you can check us out on YouTube, on Rumble, or follow us on X. Jerry, thank you so much. Great stuff this week. There's so much more to talk about. We want to thank all of our listeners for joining us this week, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.